I'm taking stock this evening with Wayne McCurry. He is with FNB Wealth and Investments, and Paul Theron, who is the Managing Director at Vestact. In the first part of the show, we were talking about foreigners looking at South Africa and not necessarily seeing opportunities, particularly when South Africans are selling up and trying to move as much money offshore as possible. But this last month has seen a couple of interesting deals. Bidvest hasn't done a deal in years and announced recently that it was willing to buy Eqstra, £4 billion deal. And then PepsiCo, one of the world's biggest food companies, announced that it wanted to buy Pioneer Foods. And Sun International's done a small deal, upping its stake in Sibaya. So there are deals being done. There is some corporate activity, Paul Theron, drips and drabs, but we haven't seen big deals being done in quite a while.
Yeah, the global environment hasn't been all that conducive, and here in South Africa we've had lots of corporate failures, real disasters. So that's kept people mostly at bay. But those are indicative of asset prices being too low. There's no doubt that PepsiCo, as it surveys the global environment for expanding its food and drinks and snacks business, is going to look at South Africa and say, we can buy what? For how many dollars? Let's go. And they obviously are looking for an opportunity to access more points of sale, to take their Frito-Lay Simba business and take it out to all of Pioneer's customer base, et cetera, et cetera. So we've heard they've even gone so far as to turn the Africa region into a new global region with the same status as Europe and the Americas and Asia as a result of this acquisition.
They're looking at the demographics of the African continent and saying, in 10, 15 years' time, this is going to have a booming population. Hopefully that booming population has got spending power, and if that booming population has got spending power, then getting acquisitions cheaply is certainly a way to go. Because Pioneer Foods, for a long time, very few South Africans have wanted to hold shares in Pioneer Foods. It's had its own trials and tribulations.
No, look, very much so. But obviously, as Paul said, this is bottom fishing at cheap prices. Now, anyone who goes on an Africa acquisition strategy, read Shoprite's results this morning. This is for the longer term. It's not going to pay off in the next 2 years and the next 3 years. But I think the astute buyers come in after 6 years of pain to buy an asset. The ones not so astute come in after 6 years of boom and buy an asset. And there were quite a few acquisitions done 2006, 2007.
One's got to just look at Walmart and Massmart. Walmart's investment is half of what it was when they did it. Ellerines was a disaster. We've had so many disasters. Barclays came and bought Absa and then sold it back for less than it paid for it over a 10-year period.
So you would rather buy after 6 tough years than after 6 good years. Because after 6 good years, things are expensive. After 6 tough years, things are cheap.
Are we giving away the crown jewels as South Africans? We're not prepared to buy these things ourselves.
I don't know.
There is some concern that we're giving away assets too cheaply.
Yes, I don't know. But the one thing we know for sure is we need capital.
We do. But once you've
I don't
sold
think
everything,
it matters who owns these assets, Bruce. It's not as though Pioneer is going to now be disappeared and that the business is going to evaporate and run away. It'll still be here. Your Sasco Sam bread will still be delivered tomorrow morning. Your Weet-Bix will still be available. The fact that someone else is bringing capital and that it's now part of a global company that has got fresh energy to expand it and take it further is a good thing. And I think we should be happy that we are a country destination where such things happen. There are many other credible countries in the world, like China and India, that throw up all sorts of investment hurdles for global companies to come here. I think it's a great thing about this country that we have open ourselves to global capital markets and to these kinds of inward investments.
We've also got to be careful of the signals we send. If you read the Institute of Race Relations, their take on the land reform paper, which you say have got nothing to worry about, they've got lots to panic about within the land reform proposals. And then you listen to Ruth Hall, who was part of the process, and she represents an organisation called PLAS, talking about land reform. And I asked them, people from the Institute of Race Relations, it's like, this was the mandate was to find ways to reform land. This is what this proposes. This proposes a fairer and better and more equal future. And just equality doesn't mean dragging everybody down. It possibly means lifting everybody up.
Look, we've got to sort out the land issue, and I think this goes a long way. Although there will still be uncertainty. There's no definition of what is speculation.
Yep.
There's no definition of a current tenure of land. Is it just the land that people live on, or is it the whole plot or the whole farm or the whole block of flats? You don't. So there is still uncertainty, but we've got to sort this out. And remember, global investors, they look at politics all over the whole world, and they can discern what's politics and what's real.
Yeah. Bidvest buying Eqstra. I mean, that was an interesting transaction as well. And Eqstra, logistics, and it gives an indication also that Bidvest looks 10, 15 years ahead and says people are going to be moving goods and products and services around, and if we own the trucks that do it, that's a positive thing.
That's an interesting business unit. It's bounced around a little bit. It's got high capital requirements, to maintain obviously a fleet of construction and related equipment. So I think Bidvest has got the balance sheet for it, and good luck to them. I got that wrong. When Bidvest split into two bits, I thought the Bidcorp food services business would do well and that the local business would struggle. But in fact, credit to Lindsay Rolfs and his team, they've continued to trade very well.
It has. It has continued to perform very, very well indeed. And so many South African companies, though, have burnt their bridges very, very badly, going global.
Most have, yes.
And tens, hundreds of billions of rands worth of value destruction over 20 years.
I'd be interested in your view, Wayne. What about the National Health Initiative, though? Because the National Health Fund, I know we were talking about policy stuff and uncertainty in land. What about that one?
National Health, I mean, that brings to bear, again, it's a big promise that has to be delivered upon and needs money to do it. And if there is no money to do it, it can't be done.
You can't do it, So
and that's the practical reality.
It'll be by and large spoken about with a few tokens, but it's not going to be done seriously with the government's finances where they are. But if you come back to SA companies going overseas, put the mining companies aside, they've always been global. SAB made a success of it. But Bidvest, Bidcorp made a success of it. But that's almost about it.
Yeah. Lots of people went and came back with their tails between their legs.
And lost a lot of money
in the process. And again, companies keep doing the same thing over and over again.
Yeah, but they're under pressure. I mean, when the rand collapses, everyone in South Africa puts them under pressure. Get non-rand income. Go into an economy that's growing. But the mistake they make is you go into an economy that's growing from an economy that's not growing, and you pay up. Second mistake is South Africans are somehow under the opinion they can fix a problem. So Bidcorp, when they went overseas, they bought good companies that didn't need fixing. So one of the big things is South Africans went, let's buy this, it needs fixing, we can do it in an environment we don't understand, with competition we don't understand, and that's generally where and of course they see you coming, man.
Absolutely. I mean, you look at what great, supposedly the smartest people in the room, supposedly South Africa's sharpest deal makers, panicked, I suspect, and took buckets of money out as the rand was falling from 17 to 25 to the pound before Brexit, and then the reversal happened. But they've written down the value of New Look in the United Kingdom. Virgin is cutting back on staff numbers. I mean, even in South Africa, where there's a burgeoning gym population, global isn't necessarily better, is the point.
There's a nice differentiation there. So Aspen also bought businesses that they thought they would be able to fix. That hasn't gone well. The other company, though, that I can think of that went global and didn't buy assets that needed fixing, but rather came with a fresh approach, is Discovery. So why is Discovery trading weaker? Is it my NHI concerns? Is it the sovereign downgrade risk that we're currently seeing as a funding issue for insurers? Because Discovery has gone from 160 to 130 rands a share recently, which worries me.
Look, Discovery is very different in their global equity. They have obviously put money in, but their big global drive is actually on vitality, where they're selling intellectual property, they're selling the system, and then their partners go and sell the product. And so their partners have got the sales force, the new business strain, all of that. Discovery just sells the system and actually gets income, and there's maybe very good growth prospects from that side. But from the bank side, to be honest, I mean, obviously I work for a bank. To me, it almost seems like Cell C entering the cell phone market. Why would you want to enter a market that's already probably overbanked, with very big and very competitive, very able competitors in the same market, in an economy that's not really growing? I wouldn't want to start a new bank today. To be honest, I don't see
because you think you can do it better. Maybe this becomes the albatross.
But that's almost a race to the bottom.
But a couple of weeks ago on the show, Adrian Gore and I were on treadmills at the Discovery Gym, one of the top floors of the Discovery Gym.
How did that go?
He was exhausted.
Did you keep up with Adrian?
Adrian kept up with me.
Good.
He didn't break a sweat. He was amazing. But I did ask him if his 25% stake in Ping An Health was going to be his 10 cent. And I could almost see him wanting to say, I blimmin' hope so. But he holds himself back.
But look, that is the vitality Ping An, John Hopkins in America.
Yeah.
It's all over the
Generali,
place. Generali. That is the growth vector.
Only 3% of Discovery's profits come from outside of South Africa for now.
I know, but
There must be some big upside still coming.
These companies have now, for the first time in the last year, actually seen the direct benefits of the Vitality system. So their margins are up, their sales are up, and of course they pay Discovery a percentage of that. And these things are escalating quickly. So you look, maybe there is a big upside, but as I said earlier on, and once again, I work for FNB. It's not that easy to open a new bank in the South African environment.
And
it's just not easy.
And if you look at the uptake, and it has been so, we challenged Adrian Gore about that in March this year. And he said that it was coming, and it is coming. It's trickling through. But it turns out that, yes, starting a new bank in South Africa is tough. Just coming up in September, we're expecting yet another bank. And that will be the Bank Zero, of course, started by a team from FNB, the original executive team at FNB. And they've been very, very quiet about the prospects of launching and taking the world by a storm. We'll wrap up taking stock on this Thursday evening in a moment.